Welcome to the channel. When you think of shopping in Africa, you typically think of long queues at the mall, being ripped off in markets, or wasting all of your day simply travelling around and getting stuck in endless traffic jams. Well, that was my experience when I lived there. So it's not typically known for its e-commerce. However, there is one company that is trying to change this and put Africa on the map as a technology startup. Its name is Jumia, and today we're going to consider whether this is something that we would like to hold in our portfolio either now or in the near future, or whether it is something we simply want to swipe left on. So Jumia Technologies is an online e-commerce platform that sells everything from electronics to groceries to clothes across many African countries. They started in Nigeria in 2012 and have since quickly expanded, selling into over 11 African countries, including South Africa, Kenya, and Egypt. They offer millions of products from over 50,000 sellers, including L'Oreal, Johnson & Johnson, Nike, plus many, many more, helping their clients ultimately find the best quality products at the most competitive prices. Its aim is to harness the power of technology to become a major component in improving the e-commerce fortunes of Africa, a continent that has traditionally not been a part of the online boom. Although they are sometimes regarded as an African Amazon, I believe that they are more than this, as they have many other ways to generate revenues. In addition to its platform, it has a logistics business, which offers the shipment and delivery of packages from sellers to consumers. They have Jumia Pay, its digital payment service, which can be made for making payments, sending money, or simply making investments. You can also top up your airtime, book hotels and flights, so they offer a restaurant food delivery service. So they could be regarded as an Amazon, Google Pay, UPS, Booking.com, and Uber Eats all rolled into one. Jumia on paper is a win-win-win for both its clients, suppliers, and Africa. They have a compelling story as they want to be a leading e-commerce business and a household name in Africa, which they are taking strides to achieve. They understand the African market and have created the business to recognize Africa's challenges and ways of operating within it. One thing I like is that you can choose whether you want to have your items delivered to your house or whether you would rather collect them from one of their many pickup locations, saving you time and avoiding you wasting it by traveling and being stuck in traffic, which is very common in major African cities. It is good for sellers who can use Jumia's platform not just to sell, but also helping them to create a brand, utilizing their market data and access financing, all which should help them achieve further growth. It is good for Africa, as they are offering great products at the best prices, delivering all over the country. In fact, just like China's Pinduoduo, they deliver 50% of all items to rural and secondary cities, which means that everyone can access the benefits of their platform. This will provide new opportunities to African talents, create jobs and tax revenues from a thriving e-commerce business. They have a great management team, including Jeremy Hodara and Sasha Poinek, both ex-McKinsey consultants, who founded the company and have been with them ever since. They have a strong board, including their chairman, Jonathan Klein, who was responsible for the successful expansion of Getty Images in the late 1990s. And also, they have great investors backing them, with their largest shareholders being Bailey Gifford, Pernod Ricard, and Orange. Some would say that they are already incredibly successful. They are achieving great growth, with 2019 sales bringing in over 160 million euros of revenues, which is up 38.7% on the year prior. Jumia Pay has also seen a tremendous growth, growing by 50% year on year. Jumia now claims that 50% of all retail transactions in both Nigeria and Egypt are being processed by Jumia Pay, which is a huge goal to reach. However, it is not all good news for Jumia, and there are some areas that concern me. Firstly, and it is the most well-known concern, is that Jumia is not really an African company. I mean, yes, they do business in Africa, but their shareholders are European, their founders are European, their headquarters are in Berlin, its technology and product team is in Porto, and its senior leaders are in Dubai. They have therefore received a lot of negative press that they are just exploiting Africa for their own gains. And in today's political and socially sensitive climates, this could have an impact on their overall brand's position. As this is a tech stock, it doesn't pay a dividend, which, although this is not uncommon with online e-commerce platforms, this may however put off many dividend investors. However, my biggest concerns is that they are not currently profitable. And although this is not common for some technology companies like Jumia to be profitable in the first few years of business, one fact is that Amazon was able to achieve profitability within 6, but Jumia is still not profitable after 8. When I looked at their most recent financials, I believe that they are going to have to really grow revenues or cut expenses to be profitable. From the P&L, the major takeaways was that revenues, although were an impressive 97.9 million, this was down nearly 12% on the previous year. Luckily, their cost of revenues fell too, that they are able to cut their costs accordingly, which ultimately led to gross profits increasing by 22% year on year, and their operating losses decreasing by 49% year on year. However, I feel that OPEX is still too high, with it being 1.8 times revenue for the 9 months ended 30th of September 2020. Looking at the balance sheet, the major takeaways was that assets are down, with cash declining 13.5% from 2019. This is not good, as they are currently burning cash to grow the business and may need to raise further cash in the future. As they appear to have little to no debt, any future cash raises could come at the expense of the shareholders through dilution, something that happened in the past year when total shares outstanding grew by 14.3%. Although I believe that Jumia has a good business model, I want to look at its share price performance over the past 12 months to understand what would be a good entry or exit price. This is a very volatile stock and has traded between $2.15 and $69.89. It can see huge weekly swings, increasing as much as 67% in a week and falling as much as 34%. This was exemplified in May 2019 when Andrew Left from Citron Research cited concerns over financial discrepancies and fraudulent orders that led to the share price tanking. Another major concern is that it is just covered by 7 brokers, with 6 calling it a hold and 1 calling it a sell. However, it seems that some people can't make up their minds, as Andrew Left a year on is now appearing to be buying the stock. One of the things that does not sit with me is that it is not heavily held by institutional investors, which is something that I always look for considering if I want to buy a stock. In fact, institutional investors only account for 34.7%, whereas the general public holds 53% of all shares. This is a major concern, as I fear that Jumia is more of a meme stock or a highly speculative play that might not sit well with steady investors. It's not hard to understand the attractiveness of Jumia. By investing in Jumia, you're betting on Africa, a traditionally underdeveloped continent, which is set to see rapid growth throughout the 21st century. In fact, Jumia's core market, Nigeria, is set to become the world's third largest country by population by the year 2050. These 1.2 billion consumers will spend $4 trillion each year, which takes place in mostly offline businesses. However, this very young population has disposable income and is embracing online shopping. With the hopeful growth of Africa, these consumers will have more and more money to consume. It is this factor that is driving the valuation of Jumia, especially when it is currently so unprofitable. Although the growth opportunities are massive, so are the threats. Selling across the continent and into so many countries is not easy. They each have different languages, tastes, customs, and laws that will make it even tougher for Jumia to sustain its current growth. Twinned with the real continued threat of Konga, a local competitor, plus the risk of Amazon or Alibaba or JD entering the market to cannibalize their core market, plus apps like Grab, Uber or PayPal affecting their secondary business, the risk that the success of Jumia will lead to more investment into Africa, creating more and more tech firms that can compete with Jumia. It is all these factors that could severely impact their future revenues. Yes, they do have a first-person advantage, but they do not have an impenetrable moat. I believe that management has a long way to go to get this company to profitability, and I question whether they will be able to scale revenues and cut costs to a level when they can start to achieve profits. With this all in mind, we see this as a risky business, but a highly lucrative investment. I am interested, but I'm interested in buying at a lot cheaper price, and I won't make my move until it reaches the $20 to $25 price range, which is what I have calculated to be the true investment value of this company. Looking at my trading charts, I believe that this business is currently oversold, and with the recent tech pullbacks in late February 2021, I believe that this stock can fall further. So for now, I'm waiting. However, what do you think? Please leave me a comment below and I will reply to every single one. And remember, I'm not a financial expert and these are just my own opinions. So please do your own research before making any investment. Thanks for watching and have a great day.